to Nirmal, ladies and gentlemen. I'm Hirodatia. We have with us Mr. Khoon Goh, Head of Asia Research, ANZ economist and forex strategist joining in. Welcome to the show, Khoon, and always a pleasure to speak to you and get insights from you. Khoon, my first question coming to you is, this is a crucial week for the commodity market as well as the currency market, because you have four central banks, that were actually meeting. A lot of rate discussions, hikes, downticks that could be initiated. FOMC is the crucial one. What's your anticipation, number one, from there?
I'm expecting the Fed to hike by 75 basis points. I think that's already well signaled and well priced in by markets. I think there's a chance that they might opt for a more aggressive hike of 100 basis points. But at this stage, I think that would send too much of a panic signal to markets. So I think at this stage, they'll opt for a hawkish 75 basis point hike. But I think more importantly is that they're going to present a new set of forecasts to the markets, the dot plots, so to speak. And I think the dot plots will definitely show a much higher terminal rate. And that's a signal to the market that the Fed now thinks they need to do more and push the peak of the Fed funds rate higher than they had previously anticipated.
Right. So overall, as you're saying, a 75 basis point rate hike is what the street is anticipating and is pricing in. How are you expecting the dollar index to move once the meeting is over?
Look, I think given that it's already been expected and priced in, we might see a little bit of volatility in the dollar as a knee-jerk reaction to that. But I think beyond that, the path on trajectory of the dollar is clearly towards further strengthening. I don't think we've seen a peak in the US dollar yet as measured by the DXY. And that's really simply because the Fed is going to pursue a continued tightening cycle. And by the end of this year or early next year, the Fed will be the highest yielding G10 currency. And while other central banks are going to try and hike as well, they are not going to be able to catch up or bring their policy rates to the same level as the Fed. So therefore, the US dollar will maintain a clear yield advantage over other major currencies, and it's still a reserve currency. Let's not forget. And on top of that, you have just ongoing global uncertainty. Risk of global recession has risen. You have a continuation and a potential escalation of the Russia-Ukraine conflict. And therefore, in this current environment, it's really hard to go past the US dollar as the preferred currency of choice.
Mm-hmm. Right. So overall, if you go to see, the dollar, as you mentioned as well, has pulled back. You have the equities which have rebounded as well ahead of the FOMC. And clearly, there has been no clear catalyst behind the greenbacks breather. And it seems like traders have decided to liquidate some of their long positions ahead of today's meeting. So from here on as well, do you think we could see an extension of the downside? Or do you think, there could be a major move that could come in, which could be short-lived?
Look, I think it's only natural for some profit taking to come in ahead of the FOMC, and I think we've seen that recently with the dollar,
Are you able
the
to hear
DXY. Yes, I can hear you.
Yes, go on. I think I lost you for a couple of seconds, but go on.
Yeah. Look, it's only natural for some profit taking to kick in before the FOMC, and that's a key reason why we've seen the DXY stall at around current levels. And on top of that, especially on the dollar-yen level, as it approached the 145 level, there were growing concerns about potential Bank of Japan intervention as well, which has really prevented the market from pushing the dollar-yen beyond that. But I think once we get the Fed out of the way, and if we get that hawkish messaging as we expect, I think that should clear the path for markets to re-engage in long dollar positions again, which will take the DXY towards new cycle highs. And in particular, following on from the FOMC, we have the Bank of Japan, where we expect BOJ Governor Kuroda to maintain his firm stance of yield curve control, capping the 10-year JGB at 0.25%. and dissuading the market from any shift in BOJ policy. So as a result of that, I think that widening yield differential between US and Japan will continue to exert weakening pressure on the yen.
Right. And overall, if you see, Khoon, in terms of the Swiss franc as well, now, clearly, if you go to see the Swiss franc, there's an anticipation could advance. And this is on the back of the 100 basis point rate hike and signals of additional bigger moves that are coming in on that end as well. So how are you expecting the Swiss franc to move?
Well, the SNB or Swiss National Bank has already hiked rates, but their rates are still in negative territory. We expect them to move again and emerge out from negative territory, but the reality is that the rate differential is still very much well behind where the Fed's rate is now and where the Fed's rate will end up by the end of this year. So for that reason, I expect the Swiss franc to remain under a little bit of pressure. I don't think it's going to weaken as much as the euro, for example. And the Swiss franc also has a slight advantage in being somewhat of a safe haven asset. So in times of volatility, if there's a further risk of bout in markets, that will tend to benefit the Swiss franc at the margin. So it's not going to weaken as much as, say, the euro or the sterling. But I think against the greenback, I think it's probably got a little bit more weakness to come in the near term.
Right. Khoon, overall, how are you expecting the euro and the pound to move from here on as well?
I think I'm still quite negative on the euro. I think it's broken below parity and potentially it's got further downside to go, especially as it's facing huge challenges in terms of the energy crisis that they're facing. As we approach winter, there's a question mark about how households and businesses will cope with very high and elevated energy costs. And the Ukraine conflict doesn't look like it's going to get resolved anytime soon. In fact, the latest headlines coming up suggesting Putin has, started a partial conscription, suggests that there could be a further near-term escalation of the situation. So that's going to continue to weigh on the euro currency. And despite the ECB hiking by 75 basis points and talking about potential large rate hikes to come, they're still going to lag behind the Fed. And all in all, it tells me that there's further downside for the euro to come.
Right. And overall, what's your view with regards to the Indian rupee as well? Because the RBI, interestingly, has been able to maintain the rupee versus any other currencies, right? So how are you seeing the rupee move from here on? Do you think, and what levels do you see it stabilizing?
Well, the rupee has already weakened quite a lot this year, and it's weakened to record levels against the US dollar. But there's a very clear level in dollar INR at 80, where the RBI has been intervening quite aggressively to cap the extent of weakness over there. And although the RBI has already expanded quite a lot of their reserves, they still have ample ammunition to continue to try and stabilize the rupee at around those levels. So whilst further dollar strength, as the Fed continues to hike aggressively, we'll probably see some more near-term weakness, and maybe that 80 level will eventually give way. But I don't think the rupee will weaken too much beyond that. Part of the reason is that India is actually starting to attract inflows, not only in terms of portfolio flows. I mean, equity flows have been quite decent, but there's also increasing expectations about index inclusion of Indian government bonds. If that were to eventuate, then that would see an increase in bond inflows, which will help support the rupee. On top of that, India has also been attracting quite decent foreign direct investment flows as well. And given that the energy prices, global oil prices have come off in recent months, that at least will help to take some pressure off the trade balance as well. So all in all, I think the rupee had already weakened quite substantially so far this year. I think looking forward, there could be a little bit more near-term weakness on the back of further dollar strength, but I think the extent of the weakness going forward will be limited. So I think what you'll find is that the rupee will probably, might end up actually outperforming some of the other major currencies.
Right. So very lastly, Khoon, what are the key strategies that you would actually recommend?
So what we've been advocating to our clients is, as much as possible, try and remove dollar risk, unless you want to take, outright just long dollar positions. But in terms of other currencies, doing relative value is the way to go. And in the current environment, within Asia, we very much favor Southeast Asian and South Asian currencies like the Indian rupee and the Singapore dollar. Versus the North Asian currencies such as the Korean won or the Taiwanese dollar, because we think there's further downside for those currencies. And we are still somewhat bearish on the yen. So I think one of our current recommendations is basically to sell the yen, use the yen as a funding currency. And on the long side of that, we have been favoring the Chinese yuan, because we expect the Chinese authorities to try and maintain some currency stability, especially heading into the 20th Party Congress in mid-October.
Right. So, Khoon, would it be right to say that South Asian currencies overall will be a favorite basket, and advice to sell yen and buy yuan right now, right?
Yeah, that's right.
Absolutely. All right. Thank you, Khoon. Thank you so much for joining us on the show. It's always a pleasure to speak to you, get insights from you as well. Thank you. Stay safe and speak to you soon again.
Yeah, welcome. Thank you. Bye.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.